What's going on, everybody? Jeff here. Welcome back to the channel. Change of events happening, leading the market to sell off all day. In this video, we're going to go over what was released from the Fed minutes from December's meeting and what was the big change. It'll break everything down for you, talk about where I see the market going in the short term and the long term, and answer the big question, is this the start of the correction? Let's get right into it. First off, we're going to take a look at what was stated inside the minutes today. And we're also going to take a look at an article that was posted in December after the December meeting, just to see exactly what changed. If you are unfamiliar of what the minutes are, it is basically just a written detailed description of exactly what was stated in the previous month's meetings. So let's get started. So first off, members expressed concern about inflation and said the jobs market is nearing full employment. The stock slid following the release while government bond yields rose. So while officials did not make any determination about when the Fed will start rolling off the $8.3 trillion in treasuries and mortgage-backed securities, statements out of the meeting indicated the process could start in 2022. Now, the Federal Reserve has already slowed down their tapering. We've been talking about this for months. They were originally purchasing about 120 billion a month. They slowed it down, taking off about 15 billion, and then in December's meeting stated they would accelerate the tapering a little bit quicker in order to combat inflation. That was stated in the December meeting. Now, market expectations currently are for the Fed to start raising its benchmark interest rate in March. This is what I believe spooked investors. They're going to start raising interest rates in March. Now, slowly over the past year, the time frame just got shorter and shorter. Originally, it was 2023, then it was end of 2022, second half of 2022, and now, as you can see, it is going to be in March, and that is what spooked investors. Now, anytime the Fed, first of all, begins to talk a little bit or any little change it happens, it always spooks investors. And as you can see here, what I wrote in the pre-market notes, where minutes are going to be released at 2 p.m., it's always slow into the release. So long as nothing changes, the volume will come back in. And as I have here in the bottom, I said, keep your options ready. Puts into the minutes released and calls right after. And I even say nothing is guaranteed, but 9 out of 10 times the minutes do not highlight any changes that spook investors. It actually almost calls for a little bit of confirmation that there's going to be no change. Now, we had puts going all the way into the minutes release at about 201, 202. When the algos fired up, we got a big pop on a lot of our stocks that were beaten down. I switched over to calls and I got burnt. I completely got burnt because I think I got a little complacent just stating that there were no changes. Now, as I said right here in last article, market expectations currently are for the Fed to start raising its benchmark in March, and that is what spooked investors. But if you look at the article, this is back from December 15th, and it says officials expect to raise interest rates, which are now at near zero, 3 times next year. Economic developments and changes in the outlook warrant this evolution, okay? And Powell had stated that the pullback on bond purchases more quickly would need to happen, putting the program on track to end completely in March. So if the program was going to end in March, the interest rate time frame starting to rise was March to June, okay? They're more traditional, powerful tool, raise it sooner. The Fed has made it clear it wants to end its bond buying program before it raises interest rates. So if you're sitting there thinking to yourself right now, well, Jeff, there really was no change in the minutes. They kind of just confirmed, which I guess officials had stated that it was about 70 to 80% chance happening in March. Okay, so that went up from a 50% chance to a 70 to 80% chance, but nothing has really changed. So when you come over here and you look and you see the market just completely get that pop out, right? You see this? Let me zoom in a little bit closer for you guys. You can see this little green pop right here. That's where I got caught on those calls. But luckily, I was able to switch back over to puts once I read the minutes. And I did, have a little bit of loss still on that position. I didn't gain all of it back on the puts, but the market just continued to tank all the way down. It is stabilizing now in after hours. I think the Nasdaq, the QQQs, was a little bit choppier going into it. I believe this is a little bit of an overreaction. All right, I think the market will respond, nicely over the next week or so. We do have CPI and jobs data being released very shortly, so that's just going to, stabilize the market a little bit. Now, my whole point behind this is two things. One, I don't see big changes happening. Okay, everything that was in the minutes is still expected. I think it's just a little bit confirmation. I also feel with which we had happen about a few weeks ago over in the UK. Okay, when they unexpectedly raised interest rates because COVID, cases are starting to rise. I think investors naturally felt that they weren't going to make any changes that quickly, but just knowing that inflation is really running rampant, I do believe, like I said, this is going to be a little bit overreaction. If we do take a look at this from a yearly standpoint, okay, taking a look at the QQQs, as you can see here, this is just a lot of choppiness. Okay, a lot of choppiness. That's why we continue to play the quick plays. All right, this morning, I got to go over to a daily, the 1 minute chart. This morning we had MYNZ, which had some news out of it. This was amazing. This went up about 50% from when it was first alerted. Another one was LIXT, which is a little bit later for all you guys over there on the Pacific coast, or all of you over in Europe and beyond who get to, go to work all day, then come home and see our pre-market. All right, you're able to, capitalize on some of these moves. When it comes to trying to time and play everything to the long side, just continue to be patient because it's very difficult to find direction when you're looking at a chart like this. Okay, and I'm talking long term now. On the daily, sure, we're still in the uptrend. When you zoom in a little bit closer, you have massive choppiness. Trying to buy the breakout levels is clearly not working. As you can see, it gets a little bit higher, then we get severe rejection coming back down. As you can see right here, we reached that all-time high, the 480 again, almost touching 480, but 480, seeing that resistance, little curl, we got that touch, and then it just insane rejection coming back down. Okay, and as you can see too, it's also the high growth, the tech sector that is getting hit heavier. So long and short of it, I don't think there was big changes inside the minutes. I do think the market will rebound from this overreaction. However, when it comes to just massively to the long side, we got a lot of changes ahead of us. All right, so it's okay to be able to switch around your portfolio, switch around your strategies. All right, this is always the best time to be able to learn. The morning plays, the small caps, the pre-market are what's hot right now. Be able to get in, even if you have a small account, you see some of these running, 50%, 60%, 70%, get in with a small amount, even $1,000, $1,200. All right, you can make, your weekly salary in the matter of just a few minutes. It's all about being patient, waiting for the plays to come to you. So it'll be ironic to see how the market reacts, like I said, in the long term. I stated in the short term, I do think this will recover. It's a bit of an overreaction, but in the long term, we have a lot of changes happening. We still haven't seen the, that 10% correction in SPY as we are almost closing the second year of a bull run. And as you know, I've mentioned this numerous times before, that does get to be a little bit unnatural. So we'll continue to play. I am always adjusting my strategies on what the market is giving us. And I'm excited for 2022. It's off to a good start. But that's it for this video, guys. I'll see you in the next one.